Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of the video is Pound Dollar, How to Trade Forex in 2015. Pound Dollar, How to Trade Forex in 2015. Let's get started. Professional traders trade around key levels. Ordinary traders spend their time looking at technical indicators, trading technical indicators, instead of trading around key levels. In this video, I'm going to share with you, Forex trading tips and tricks that one can apply trading the British pound US dollar currency pair. All right. When we are talking about the British pound US dollar currency pair, or the pound dollar currency pair, or the cable as traders call it, the pound dollar currency pair is also called cable, C-A-B-L-E. All right, if one is trading the pound dollar currency pair, one is comparing the economy of United Kingdom and the economy of United States. All right, so if the economy of United States is doing better than the economy of United Kingdom, the pound dollar is likely to go down. On the other hand, if the economy of United Kingdom is doing better than the economy of United States, the pound dollar is likely to go up. Another thing that we can say to traders, if the market sentiment towards the dollar, is bullish, but the market sentiment against the pound is bearish, this currency pair is likely to go down. On the other hand, if the market sentiment towards the economy of United Kingdom is bullish, but the sentiment against the U.S. economy is bearish, this currency pair is likely, to go up. All right, you need to understand this, and you want to understand it clearly. Another thing to add that I need to say to traders, if the monetary policy adopted by the Federal Reserve in the United States is favorable to the dollar, but we have a kind of a devaluation policy in the United Kingdom, this currency pair is likely to go down. We want to understand the policy that the Federal Reserve is adopting, towards the dollar, and also compare it to the current policy that are made by the Bank of England, or the governor of the Bank of England. All right. When we are trading forex, we need to understand this very carefully. We need to understand that we are dealing with a real money, and we are also competing against the wealth managers. All right. Something is happening. If, for instance, there is a currency that is a devalue, like we have seen for the dollar, the money manager will transfer funds, the wealth, out of United States into another country where they will earn more interest, on their wealth. All right. So we see that from 2008 to 2012, the Federal Reserve was busy devaluing the US dollar. There was outflow of capital outside the United States into other countries where the interest was quite high. For instance, there were outflow of dollar into the Swiss franc and also into the Australian dollar. Now, the Federal Reserve has stopped devaluing the US dollar and is saying to the market, that when the conditions are favorable, they will start putting up interest rate. It's just a game, all right? The economy is doing well, United States right now. There will have more job creation, all right? The market sentiment is improving towards the US dollar, all right? But the economy is talking about the global economy, because the Federal Reserve cannot start putting up interest rate in the void, all right? We have to think of the global economy. Talking about the global economy, the Federal Reserve will find it very difficult to put up interest rate very soon. But by saying that soon they will put up interest rate, the market was busy buying the US dollar. All right. The same thing that the governor of the Bank of England, Mr. Mark Carney, has said to the market previously that they are likely to start putting up interest rate because the current rate is at 0.5. All right, so the market start buying the pound dollar against the euro and other currency. All right, but this week, on the 12th of March 2015, Mr. Carney, the governor of the Bank of England, has said something different. He has said something very, very important. Did you pay attention to that? Okay. He said that, okay, because of the low inflation in other parts of the world, all right, he cannot afford to put up interest rate very soon, which is a change of, policy. So first he said to the market that we are ready to put up interest rate in United Kingdom, but on the 12th of March this week, all right, he has said to the market that due to the low inflation in other parts of the world and also what we call outflow of capital into the pound, he cannot afford to put up interest rate. This is about a currency war. The Bank of England does not want the pound to be too expensive, to appreciate too fast, which means the goods from United Kingdom will become more expensive in comparison to other countries, which will put a lot of pressure on traders that are exporting goods out of United Kingdom. All right, you understand it? So if the pound continue to go up, if the pound is very, very strong, all right, that will have a negative effect, all right, on the export of this country. So because of what's happening, low inflation around the world, and also we see what is happening in Greece, all right, all these wealthy people in Greece, because of this, the economy situation in Greece, there is what we call outflow of capital out of Greece into Great Britain, all right, into the United Kingdom. And also we see that in the Eurozone currently, Mr. Draghi, the European Central Bank, is devaluing the euro, making the euro gold cheaper compared to the pound. We have seen what we call also outflow of capital from the Eurozone into the pound and also into the US dollar. So we have seen that the pound has started going up against the euro, which means the goods from United Kingdom are becoming more expensive in the Eurozone, all right? So people that are exporting goods from the United Kingdom into other countries are finding it difficult to sell their goods. This is about currency war. So if the currency is appreciating too fast, it's putting pressure on people that are exporting goods, and the central bank has to make decisions to rectify this imbalance, all right? So when we are trading Forex, we need to understand what is going on. We need to think of the central bank, and also we need to think of, the money manager or the wealth manager. These are real things that are happening in real time. Though we are talking about technical analysis, we need to understand what is taking place. Decisions are made, money are moved around, there is outflow capital, and this will affect the Forex market. So this is the situation for the pound. First, the governor of the Bank of England said to the market that, soon we'll put up interest rate, but this week he has said that, because of the outflow capital into the pound zone or into United Kingdom, he cannot afford to put up interest rates soon. Because of that, what we have seen, the market responded quickly. This is a change of policy, and they start selling the pound like a mad dog. So you see this week, so suddenly, see the pound start going down big time, all right? So you may find this discussion a bit boring if you are a technical trader, but I will invite you to stay with me because I'm going to go into the technical analysis of the pound dollar. This is a thorough technical analysis that I'm going to do today, but I cannot afford to start talking about technical analysis without explaining to you the fundamentals that are governing, the currency market. Let's get started, all right? There are key levels that I want you to understand because I said to you that professional traders trade around key levels. So we know now that there is a change of policy. So first the market was busy buying the pound. You can see that since February it was going up. But last 2 weeks suddenly it started changing direction. So there is a change of policy. So normally we should have said to you today that give priority to bullish signal or the market sentiment is bullish, but there is a change of policy making the market sentiment bearish towards the pound. So you remember what I said to you before. For the euro, the market want to sell the euro, all right? For the Australian dollar, the market want to sell the Australian dollar. For the New Zealand dollar, the sentiment is also bearish because of the policy of the Bank of New Zealand, okay? For the dollar, the Federal Reserve said that, okay, here, when they are ready, when the economy is ready, they will put up interest rate. Now, the market is busy buying the dollar, okay? So, because of what the governor of the Bank of England has said on the 12th of March 2015, the market sentiment has changed against the pound. So now, the market would like to sell the pound. So, the reason why I say this all the time, so the trader may know that any bullish trend is a contra trend, all right? So we know that we don't want to fight the market sentiment. We want to align our strategy with the market sentiment. So we want to know when we are taking a contra trend against the market sentiment so we may know how to manage the trade. This is very, very important. All right. I recommend to traders to combine the technical analysis with the fundamental. All right. Read, okay, economy news from Forex Factory, the Financial Times, Bloomberg. Be aware of what's happening in the Forex market so you may stay tuned and make excellent decisions. All right. The first key level that we're going to discuss today is the short-term equilibrium price level. This level will remain in place at least for 2 weeks. But depending on what's going on in this messy Forex market, it may stay in place for a while. But for now, the short-term equilibrium price level for the pound-dollar currency pair is at 152.65. Note it down, okay? This level will remain in place at least for 2 weeks, all right? The long-term equilibrium price level for the pound-dollar currency pair is at 158.93. All right? It's the pink line here, 158.93. Do not forget this level throughout 2015. The price may not come back to retest it, but we want to know where it is. So if the price coming near it, we know exactly what is taking place. So the long-term equilibrium price level for the pound-dollar currency pair, which we should not forget throughout 2015, is at 158.93. It's the pink line here. The short-term equilibrium price level is the orange line here. It's at 152.65. Note them down. I want to show you something here. What have I said before? One cannot achieve consistent winning trade if one is violating market patterns. So on a certain time frame, do not violate the 3 market pattern: rising channel, declining channel, horizontal market pattern. You have to draw the channel on your setup time frame. When you switch your time frame to the signal time frame, you must draw again the market pattern. When you go into enter the trade, you must also draw the market pattern. So whenever you are taking a bullish trade, you want to align, okay, all the market pattern, okay, on the 3 time frame to have a harmonious trade. You do not want to violate the market pattern. If you are using a TSTW24 or TSTWSYS08, any signal should not violate the market pattern on your setup time frame and also on the first best time frame. Always draw your channels, okay? On a yearly chart, what are we seeing here? We see a consolidation, all right? So the market pattern here is horizontal market pattern. The top part of the consolidation is the red horizontal line here. The lower part of the consolidation is the green line here. So you can see that the price is oscillating between the red line here and the dark green horizontal line here. You see here? So I want you to know these 2 levels down. The high of the consolidation on the yearly chart, okay, is at 171.33. The low of the consolidation is at 134.99. So the market pattern on the yearly chart is consolidation. So what is happening now is that the pound is going down from the top of the consolidation, trying to reach the lower part of the consolidation. So you see here, it went up all the way up here. Now it's coming back down. Okay, so draw the high at 171.33, the low of the consolidation at 134.99. We do not want to violate this market pattern. So you see now, if it's going up in this horizontal channel, you see that you have a horizontal channel within or you will have a rising channel, all right? If it's going up like this, it will be in a rising channel, okay? And if it's going down, it will be a declining channel. But the bigger market pattern is horizontal, all right? Okay, because the price, if it's going up, it will be in a rising channel, okay? If it's going up, if it's going down, it will be in a declining channel. But the market pattern is horizontal market pattern, okay? Do not forget it, okay? Do not forget it. There is another key level that I want you to remember. In fact, you shouldn't forget it. Note it down. The price approaching that level now, okay, is the gray line here, okay? This gray line here is the low of 2008, all right? That level, you don't want to forget it. It's at 143.49. 143.49. You can see that the price now, you see where we are now, we are at 147.41. Today is a Friday, the 13th of March 2015. I'm recording this video a bit early before the Forex market is closed. All right, I have a reason for it, because I want traders, okay, during the weekend time to watch this video before Sunday. All right, so the price now 147.41. Forex is not closed yesterday, but it's heading towards the low of 2008. The 2008 is a very important year, and all the key level in 2008, we must not ignore it, because that's when we have the financial crisis. So the price is heading, so to speak, towards the low of 2008. That level, we should watch it throughout this month, okay? The month of March, the month of April, watch that level. Don't forget it. So if you come here, watch it, okay? If it's going down, it's heading towards this level. This level become a critical level that we must watch. 143.49 is a key support level. As the market is pushing it down because of what the governor of the Bank of England has said, this level become critical, and professionals are watching it. You must watch it too, all right? So if it dip below it and find a resistance again, next target is the lower part of the consolidation at 134.99, all right? So this level here is a very important level for day traders and for swing traders. Remember the 143.49, 143.49. The price going down now. Let's go to the weekly chart. I don't want the video to be too long. All right, so if there is something that you do not understand, you can go back and replay the video. Okay, this video is a tutorial for Forex traders. They can watch it as many times as they like. I'm saying, okay, I'm giving to traders here important tips. They can come back and watch this video. We recorded a video about, okay, the Australian dollar, US dollar currency pair. We have recorded a video about, okay, the US dollar yen. Okay, we have also recorded a video about the US dollar Swiss franc. Now we are recording a video about the pound dollar US dollar currency pair. Before we continue, I would like to say to traders that the pound dollar currency pair usually will move in the same direction like the Euro USD. So when we are trading Forex, the first currency pair that we are watching is what? The Euro dollar. We know that the Australian dollar US dollar currency pair, the pound dollar currency pair will move in the same direction like the Euro USD. We also know that the Euro dollar move is directly influenced by crude oil. All right? So traders that are trading the Euro dollar, professionals that are trading the Euro dollar, are using crude oil as a market indicator. So if crude oil gives a bearish signal, there is a high chance that the Euro dollar will go down. But again, though we are Forex traders, we want to use the crude oil as a market indicator, okay? Now, every Wednesday, we have crude oil inventory. So Wednesday, there is something else. Watch the video about how to day trade on Wednesday at Joe Trio channel, okay? Now, so when we are trading the pound dollar currency pair, we cannot go and trade the pound dollar currency pair without checking first the euro dollar. So the point I want to make here is that if the euro dollar gives us a short signal, now we look at the pound dollar, and the pound dollar also gives us a short signal, we can sell the pound dollar currency pair. But if the euro gives us a bullish signal and the pound dollar gives us a short signal, then we need to be careful. So we must have a fundamental reason or economic news that will support, okay, our counter trend against the euro. All right, I don't want to dwell on it, otherwise we will never finish. Let's continue. So we have finished with the key level, short-term equilibrium price level, 15265. Have a notebook for the pound-dollar currency pair. Short-term equilibrium price level will remain in place for the next 2 weeks. The long-term equilibrium price level, we do not want to forget it throughout 2015, is at 15893. The low of 2008, that's where the price is heading to now, is at 13499. We know that the pound-dollar currency pair is in a range. The market pattern is horizontal market pattern. We do not want to fight the market pattern. On the yearly chart, the high of the consolidation at 17133, the low of the consolidation at 13499. Professional trade around key levels, hedge fund, big institution come into the foreign market around key levels. We want to know where are the key levels and what's going through the mind of the market movers, okay? So we do not, okay, step on their feet, all right? I'm going to show you something now. You pay attention to this blue line here, okay? The blue line here, the blue trend line. You can draw it on your chart. I'll show you how you do it, okay? On your chart, on the weekly chart, you join the high, okay? Here it is, okay? The high of August 2008. If your broker allow you to see all this data, that's beautiful. Otherwise, you have to use TC2000, all right? So the high, so I'm joining the high of August 2008, the 1st of August 2008, that week, the high, I'm drawing that high, with the high of, this can you see this candle here, with the high of, okay, April 2013, all right, the high of the week of the first week of April 2013, the high of the first week of April 2013, I'm joining in with the high, okay, of the first week of August 2008. With that, I have my blue trend line. You can see now, pay attention carefully, the price, you can see today is heading towards that trend line, all right? So you want to make decision, around key level. So this trend line is a very important trend line. That's where the price is now. So next week, you want to be careful because we are sitting on it nicely here. We may see a bit of bounce. If it bounces, there will be a counter trend against the market sentiment. It may try to rally up to the short-term equilibrium price level, but be careful. There is another level here. Pay attention carefully, my friend. You see this turquoise line here? This is a cycle point. What is a cycle point? When the price turns around 180 degrees, that's a cycle point. You can see for the dollar Swiss franc, the price went to the cycle point. Did you notice that? Okay, so watch the video again about the dollar Swiss franc, how to profit from the dollar Swiss franc in 2015. I just to your channel, subscribe, and know exactly what we are talking about. All right, so this week we see for the dollar Swiss franc, it was at a cycle point and the final resistance there and start going down. Now here we are for the pound dollar currency pair. The cycle point, which you must not forget on the weekly chart, is at a 14846. 14846. That's the turquoise line here. You can see that the price could not, so you see beginning of the year, okay, it came to the cycle point and start going up. Did you notice that? Okay, cycle point. So this year, as the market sentiment, when the governor of the Bank of England, okay, all right, said to the market that anytime they can put up interest rate, all right, and the market was expecting the Bank of England to put up interest rate, they start buying from the cycle point at 14846. So beginning of this year, see the pound start going up, okay, appreciating against the euro. Now, suddenly, this week, the governor of the Bank of England is a man from Canada, that is the governor of the Bank of England here, Mr. Mark Carney, has said that, okay, due to the inflation, in the low inflation in other parts of the world, and also outflow of capital into the pound is becoming too expensive, and it's no more ready to put up interest rates for. Because of that statement, the market started selling, okay, the pound dollar currency pair. In fact, when we are saying that the market is selling the pound dollar currency pair, the market is selling the British pound against the dollar. All right. So From the cycle point, the price was going up fast. Now because of the change of policy, okay, the recent statement from the Bank of England, see that start going down and return back below the cycle point. It's now bearish a little bit here. So next week, apart from so for day traders and swing traders, we said that the level you must not forget and remember quickly is at 14349. That's the low of 2008. But you don't want to forget also the cycle point at 14846. So if we go now to the, I will go quickly to the daily chart. So you see now, this is today. You see how it did below it, okay? The cycle point today. Yesterday, you see, it found a support here and went back up before people sold it down. So because of the statement, all right? That yesterday, okay? So it found a support on the cycle point, start going up. This is the candle here. And then now, after the statement, it went back below it. So what we will prefer is that next week to see a bit of rally, because if we want to sell, we want the price to rally up, okay? If it's going down like this, it's difficult to sell, okay? Then you're going to scalp it, okay? We will prefer it to rally a little bit into the cycle point, all right? Even if you go down more, we want to see a bit of rally up, and then we sell. That's how we sell, okay? If you want to sell, we want the price to go up fast. Understand that, okay? If we want to buy, we want the price to go down to a support level. If you want to sell, if it's going down before, all right, we want it to go back up to a resistance level, and then we sell it down, all right? So next week will be better. You see, it's the blue trend line. Don't forget the blue trend line, okay? It will be nice to go below the blue trend line, and then to find a support below it, and then come back up and hit, okay, the cycle point here, and then continue to go down because of the market sentiment, okay? But what we are saying here, this is a technical analysis. Traders must check Forex factoring every day. The whole week know the news that are due, the high impact economy news relating to the pound, relating to the dollar, and how this will affect the market. Okay, combine the technical analysis with the fundamental. Okay, very, very important. But if you are a technical trader, always trade on the edge of a trend line, of a support, of a resistance level. You want to sell, ask yourself, am I selling at a resistance level? So draw that resistance level. If it goes above it and find a support, bail out, okay? Bail out. You want to buy at the support level. Anytime you see a buy signal, you are using TSCW24, triple green, ask yourself, is the triple green at a support level? Now, go to the higher time frame. Which setup has created the signal? Because a high probability setup, we create a beautiful signal, and then we select a low risk entry point. Sometimes you may see a gorgeous, beautiful signal, but the setup is useless. You walk away from it, okay? The setup must be solid, all right? So when we see a setup on the daily chart, on the 4-hour chart, on the 2-hour chart, on the 30-minute chart, okay, on the weekly chart. So whenever you're on the one time frame, you see the setup, you must now go to another higher time frame to see whether that setup is valid. Now, after that, you go to the signal time frame, wait for signal. For TSTW24, we have simplified everything. You see the setup, look for a setup. It can be a chart pattern, whatever setup. Now, then go to this, okay, first best time frame. That's it. All right. So this is what we want. We want it to rally back to the cycle point. And if we receive a sell signal, we'll sell. By the way, this video, okay, do not use this video as a sell signal or as a buy signal. All right. I'm saying this to new traders, okay, because I understand new traders do not use a trading tutorial as a trading signal. All right. Draw the key levels, watch the reaction of the price, draw your channels, okay, and trade on the edge, okay? All right? If the price at a resistance level, for instance, on the 2-hour chart, on the 4-hour chart, if it's going to go down, you go down in a declining chart. So if you go to the entry time frame, like 3 minutes or whichever time frame, 5 minutes, you want to see in a declining channel, but you want to sell it on the edge. Always draw a warning line. Okay, always draw a warning line. Okay, so this is about the pound-dollar currency pair. We are talking about the pound-dollar. Okay, all right, how to trade Forex in 2015. I recommend to traders to come back and watch this video as many times, because this is a very important video about the pound-dollar currency pair. Traders can use their own technical trading tool, but I want traders to understand what the professional are paying attention to when they are trading the pound-dollar currency pair, all right? The key levels, all right? And the market pattern on the yearly chart is a consolidation. The price heading towards the lower part of the chart, the consolidation, but there is the low of 2008 that we cannot ignore. There is also a cycle point where we are now, the blue trend line, and we want to navigate through the market. So these are key levels. That's where the professionals are making decisions. And we want to do exactly the same thing. It makes sense? It makes sense? All right? So if the price D below a support level, you see here, D below the pink line, you want it to rally up. And then if you receive a sell signal here, you take it down. That's how we sell, okay? You see here, D below it, if it come near, you look for a sell. If it fail to display a new lower low after you receive a sell, you know that it's not going to go down more. So you see here, if you come back down and retest, you sell it, the first target is the low here. But if it fail to break this low, it means that the bearish momentum is not very strong. The same thing we want to buy, breaks above a resistance level, retest if you find a support. If it start going up, the first target is the previous resistance here. If it fail to go above, you see here, as it start going up, the first target is here. So here it fell, it come back down, but it failed to display a new lower low, which means the bearish momentum, it was not strong. People bought it again until it breaks the resistance. This is about the language of the price. Draw your trend line, okay? Because this is one of the mistakes myself I made 100 times before. When I was day trading first, I never draw a trend line. I don't know why. Then I never draw a trend line, okay? I never draw it. I just use my MACD, all right? But then it come to me clearly that the price is the #1 indicator. That's why in my video, you may notice that I talk about it all the time. Do not get fed up with me, all right? Pay attention to it. Try to do it. I know some traders never draw their trend line. I encourage traders to draw their trend line, to draw their support, to draw the channels, okay, on every time frame, okay, every time frame. All right, it makes sense? So this is what we see, all right, the key levels that we must not forget where we are trading, okay, the pound-dollar currency pair. If you look carefully here, we're going to finish now. On the daily chart, you can see that draw the channel, you remember? Draw the channel on every time frame. And this will allow you to see, okay, clearly, okay, every time frame. So on the daily chart, we have a channel like this. You see how I draw it fast, okay? I join this point, okay, and this point here. That's it. Because it's going down, I need a high and a lower high. And I just choose one point somewhere here to draw a line that is parallel to it. That's it, finished. So now the price in the declining channel, you see this line, we can extend it. It's not easy for me to do it here on my chart, but you see the picture now, okay? Nothing should stop you to project that channel, okay? You remember multi-talented trading. Project it, extend it. If it's out of a channel, just project the channel. We can project that channel on the daily chart, okay? Equal size without cheating. Do it. Just get into the habit of doing this. This will allow you to dictate the hot spot trading zone and make excellent decisions, all right? It makes sense? So the key trend line that we do not want to forget is the one that I draw on a weekly chart, okay? You remember the first week of August, okay, and the first week of April, first week of August in 2008, and the first week of April in 2013, we joined that line to draw the blue trend line. That's where the price now. But apart from that, we have also the declining channel on the daily chart. We can draw it and project it to determine key levels or hotspot trading zone. This blue trend line that we have drawn on the weekly chart is a very important key levels, important trend line. The price is retesting here, the best scenario. So one thing I said to trader also recently, all right, is that when you are drawing a trend line or you want to trade on the edge of a trend line, you must always combine the trend line with either horizontal support or resistance level. All right, did you watch the video? Okay, how to filter out false double top pattern, all right, always you draw a trend line. It's coming here like this to a trend line. You want to know, look for a horizontal support that are around this zone. Where are they? Okay, you see, there's one here. I can tell you now. Okay, there's one here at 14686. Okay, 14686. Just this one, you see where my cursor is? Okay, there's a support there. So whenever you're about to enter a trade on the edge of a trend line, look for horizontal support or resistance level. Okay, because sometimes the price will be below the trend line. You may think that the trend line has failed, but the price is looking for a better support or a better resistance level. So to avoid, okay, taking a wrong hotspot trading zone, one must always combine the trend line with horizontal support and resistance level. Two lines crossing together, the horizontal and the trend line. Okay, so here you see it's approaching it like this. We want to know whether there is an horizontal support in the zone. Okay, it makes sense. It is also powerful. This is about a pound dollar, how to trade Forex in 2015. To summarize this video, to trade Forex or to trade a currency pair, one is comparing two countries. Here we are talking about the pound dollar and the US dollar. We are comparing the economy of the United Kingdom to the economy of United States. The policies that are made by the Federal Reserve, United States, will affect the US dollar, and the decisions that are made by the governor of the Bank of England, Mr. Carney, will affect the British sterling pound. All right? We want to know the market sentiment. That's very important because the hedge funds, the big institutions, are always paying attention to the central bank and the market sentiment. All right? So because of what the governor of the Bank of England has said this week, the market sentiment towards the British pound is bearish. I would like to mention to traders also, looking at the US dollar. We have noticed that the US dollar has been going up against many currency pairs. As we have seen this week, okay, the governor of the Bank of England has said that, okay, talking about the low inflation in the global economy, all right, and also outflow of capital into the pound, he cannot afford to put up interest rate. I believe that the Federal Reserve very soon will go out and say exactly the same thing, and the US dollar will come back down. The reason is there is a currency war. The US dollar has been going up too far. A lot of business that are exporting goods from the United States are feeling the pressure, though ordinary people that are going on holiday will benefit from the strong dollar. Businesses that are international businesses will suffer if the dollar is too strong. So there is a high chance that, okay, the Federal Reserve may also come out at one point, because they will not allow the US dollar to go out forever. At one point they may come out, unless the market itself starts selling it straight away, then they will keep quiet. But if the market continues to push it up, they will be forced at one point to say to the market that due to the low inflation in the global economy and also outflow of capital, like Mr. Carney, we cannot put up interest rate very soon. We have to delay that decision, and the market will respond and start pushing the US dollar down to rectify, okay, the imbalance. Is all about real money and one country competing with another country, talking about import and exports, okay? Traders should remember the long-term equilibrium price level throughout 2015 at 15893. These levels are not magic level, but they are essential key level that the professionals are looking at. Hedge funds pay attention to key levels, and ordinary traders must do exactly the same thing. The market pattern on the yearly chart, we have a balanced market pattern or a consolidation market pattern. All right, the high of that consolidation is at 17133. The low is at 13499. The price going down from the top of the consolidation, heading towards south, the south of the consolidation. All right, as the price going down, the price looking for a better support level. There is one support which is okay, the cycle point. The price is now below that cycle point at 14846, so it's below it now. So the next support that we are watching is at a 14349, which is the low of 2008. If the price dip below a support level, the best scenario for us, if we want to sell, we want it to rally up into a resistance level, and then we will use a top-down trading method, okay, to make excellent decisions. All right. I hope you have learned something from this video also, and we'll put into use, okay, to trade the pound-dollar currency pair like a professional traders in 2015. We are the TSTW24 traders talking about pound-dollar, how to trade Forex in 2015. If you like this video, please give us the thumbs up. If you dislike it, don't walk away. Please give us the thumbs down, but put a comment below. So this will help us to improve our recording. If you truly fall in love with this video, please share it on Google+, on Facebook, and also on Twitter. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders. Speak to you soon.